Thank you. Then I'll start. So, good evening, everyone. So I will quickly just do an intro of the purpose of today's revision class. I am not alone. I'm with other e-tutors. I think in the interest of time, they will introduce themselves before they sort of start their sections. But I will just do the intro, do a little bit of house rules, and then, yeah, we will get into it. So the purpose of today's revision lecture, so I saw someone in the chat talking about that, the 17 units. So I think this is the first revision lecture. So this one is focusing on VAT. I think there's been quite a couple of complaints about people not understanding or having a good grip on VAT. I think in general, also in my own tutor or e-tutor group, I think a lot of people have been asking for us to do, I think, another session on that. So that's what we'll be doing today. So we'll focus on that. We'll also focus on some of the first books of entry. So your cash receipts, cash payments, journals. Um, but I think with that being said, I think even though we are doing this session, it's quite critical, or looking for my mouse, it's quite critical that for students to, as they struggle to try and do questions individually and then refer to either this revision lecture or the original one, because I think there was a lecture done on study unit 5 on that, and this is just a revision. It's a different example, but it's quite critical for students to individually spend time understanding that they know what's going on. Because I think the lectures are quite nice because we understand what's going on, but again, it's only when the students do them individually. We will try and have this session short and leave enough time for questions. So I think that's going to be quite important that as we're going through, if you do have questions, please note them. And then lastly on the chat, so we will ask that you guys use the chat mainly for this module and this class. So I think other admin related issues, I think those you can post them either to your e-tutor, to the WhatsApp groups. But I think to try and focus specifically on that today, would just please ask that we use the chat for this revision class. And then we might disable the chat if it starts getting disruptive, but we will open it up when it's time for questions. So I think one of the lecturers, I'm not sure if one of the lecturers will close the chat, but again, I think we might leave it open, and then if it gets disruptive, that people do not follow what's going on, it might be disabled, but it will be opened when it's time for questions. And then the last thing from my end, so I think at a high level, some of the important concepts we'll be touching on besides that will be on debtors and trade receivables. So debtors and trade receivables are customers who owe the entity money. So they're a result of purchase or sales that are done on credit. So the most important thing here is that it's sales that are not done through cash. So it's the sales can either be done through credit or cash. So trade receivables are when people purchase without making payment, but end up owing the entity. Then there's creditors or trade payables. So this is when, as the entity, we buy goods or render services on credit. So we receive goods or services, but we do not make payment for them. Therefore, we still owe our own creditors or trade payables. And then the last two important concepts are sales returns and purchases returns. So these are for situations where, for sales, where client or customer has bought a good, but they then return the good, or they were overcharged. And I think in the example, we have such an example. And then purchases returns are this when as a company or as an entity, we acquire goods, but then we later return them because they're either defaultive or they were more than what we wanted. So then that is what would sort of term as a purchaser's return. Yeah, that's it from my side. Paul, are you then going to jump into the VAT part?
Yeah, thank you so much, Zuli. Yeah, so my name is Paul. I'll be covering the VAT, is the value added tax. So in terms of the VAT, obviously it's integrated across all the transactions that the business partake in, right? So all these businesses obviously engage in transactions, and when they buy or sell, obviously have to um, charge or pay for the VAT. So in short, the VAT, but the full value added tax. So it can only be charged by people who are actually registered in terms of the VAT Act. So you can do it voluntarily or involuntarily. Um, I don't think that's important for now, but the current rate is 15%. I know the last time we had a session, it was increased a bit, but our government is still indecisive in terms of that.
Mhm.
So yeah, we're gonna stick to the 15%. So we have the VAT output. So that one is only charged by the business when you sell your goods or services. Then the input then is charged to you when you actually go and buy the goods and services. So in terms of some of the rules, when you be allowed to actually claim for the input when there is obviously a valid invoice. It's not a exhaustive list. There's other rules though, but I don't think also we need to cover at this point. Um, yeah, so um, at the end of that period, either monthly or the end of 2 months or whenever you actually do your submissions, you have to assess which one is bigger between your output or and your input. If your output is higher than um, the input, then you have to make a payment to SARS. That would mean you've actually collected more VAT from your customers than you actually paid when you bought your goods and services. So the difference then you need to hand over to SARS. Then when the output is less than the input, it actually means that you paid more VAT than you actually charged, and you then need to claim a refund from SARS. Yeah, can you move to the next slide, Zulu? Yeah, so in this part of the slides, we're gonna cover the calculation part. So there are different ways in which you can actually calculate the VAT. You just need to pay attention when you receive your questions, right? Because they normally state whether the amount is VAT inclusive or VAT exclusive. But when it's VAT inclusive, it actually means that the 15% is already included in that amount. So therefore, the calculation then would be the total amount that you have in your transaction and then times the 15% and divide by the 115. That's when you're trying to get the VAT portion of that amount. So if then you trying to get the amount including VAT, you just have to take VAT amount including VAT times the 100 over the 115. And obviously, if the amount is exclusive of VAT, it means that the 15% is not included. So you're gonna take the amount from that transaction and times by the 15 over the 100. Yeah, so obviously the key thing is for you to pay attention and know whether the amount is inclusive of VAT or it's excluding VAT, because that's where mostly you're gonna be triggered. But I think if you mastered it across all your transactions, then you should be fine. Yeah, I think that summarizes it. I mean, I know we already had a solid lecture on all this, so this is obviously a revision. I think from now we're just gonna jump straight to the question, so we leave enough time for questions at the end. Thank you.
No, thanks, Paul. So I think now we can move to the questions.
Perfect. Thank you. Can I go ahead and share screen and get started on my side?
Yes, please.
Cool. Please just confirm for me that you can see my screen once it's up, if you don't mind.
No problem.
Thank you.
Can see your screen.
Thank you. Okay.
Yes.
Cool. Okay, so obviously the chat is currently disabled, so I'm going to be presenting my part of the question, and then once I'm done with presenting it, you can go ahead and ask me any questions that you want. I do know that we will be giving you a specific amount of time for the questions, just so that we can also get into the remaining questions and not run out of time. So what I want to suggest to all of you on the call is, as I'm going through the question, or my part of the question at least, please just make notes on questions that you have, just so that you don't forget those questions as well. So make notes on your side, and then when we do give the opportunity for questions, then you can put it in the chat or raise your hands, and then we'll eventually get there. Okay, so this is example 5.2 from your main study unit 5 study guide, right? And we're going to be going through the whole of exercise 5.2, but the part that I'm going to be presenting to you is essentially part 1A and B. So we're going to go through that now. I'll read through the required as well. So I'm going to be focusing on those specific areas. Okay, so essentially, we know that VAT is applicable at 15%, and my colleagues have, walked you through the difference between VAT output and VAT input, etc. Right? Let's just see what is given to us in this actual question. So basically, they tell us that this information relates to Rundu Dealers, who is a VAT vendor, right? Which means that he is Rundu Dealers as a business is registered with SARS as a VAT vendor, which means that they need to pay VAT output and can claim back VAT input. Okay. It also tells us that they use the periodic inventory system, and the VAT period of the business ends on unequal months. Okay. They then proceed to give us a bit of a trial balance as at 28th of February 2024. And then they also give us specific transactions for March 2024. So obviously this is as at the end of the previous month, and then during the month of March, there's obviously various transactions that they give to us in the question. Okay. The required states that we need to record the above transactions in the following subsidiary journals, properly totaled of Rundu Dealers for the month of March 2024. And then part A says that we need to do the cash receipts journal and we need to do the cash payments journal. Okay. So what I've gone and done, obviously just based on what they also tell us here in brackets, I've gone and kind of just done a bit of a template for the cash receipts journal as well as the cash payments journal. And then as we work through the question, we will essentially come and populate the template. Okay. So because we're going to be focusing on the CRJ and CPG, or at least that's the part that I'm going to be focused on, and then my colleagues will take it from there as well. Right. Where I would suggest that you start is to look at the additional information that's given. So these are given on various days throughout the month. Okay. And already start to kind of put down or note down or start to think about which of these specific transactions actually impact the CRJ and the CPJ. So let's do it together. Okay. If we look at cash sales of 15,640 Rand, we know that it says cash sales, right? That means there's money coming into our bank account due to a sale that Rundu Dealers would have made. Okay. So for me, this is definitely CRJ, cash receipts journal. Okay. Then it says that on the 5th, we paid the account of T Tiger by direct payment after deducting 115 Rand discount. This is a payment, right? So automatically we know this is CPJ. Okay. The next one says that we received a direct payment. Oh, sorry. Yeah. Received a direct payment from W Wolf. Again, we're receiving money, so we know that it's CRJ. The next one also says received a direct payment from Alliance. Again, we're receiving payment, CRJ. Okay. Then it's received an account from Station is Limited. Now, it doesn't say that we paid any money. It doesn't say that we received any money. All that's happening here is we're receiving an invoice for stationery. Because there's no money actually leaving my bank account or coming into my bank account, this has no bearing on either CRJ or CPJ. I'm ignoring for now. My colleagues will probably deal with it, but for purposes of CRJ and CPJ, I'm ignoring, right? Then if we look at the transactions on the 13th, it says credit sales. Again, credit sales is neither money received into my account, nor is it money paid outside, right? So which means that it's not going to affect my CRJ, CPJ. Credit sales, I'm ignoring for now. Okay. Then it says we sold an old computer and we received direct payment for this amount due. Cool, we received money, CRJ. Okay. And then it says cash sales. Again, cash sales, what does that mean? It means I'm receiving money for goods sold, CRJ. Okay. Then it says I issued a credit note to Alliant for an overcharge on the invoice on the 13th. Okay, now again, I'm issuing a credit note. That doesn't mean that any money is going out of my account. It doesn't mean that any money is coming into my account. All I'm doing is saying to Alliant, listen, don't worry, you actually owe me less. Okay, so does it affect CRJ, CPJ? The answer is no. Okay, then on the 23rd, it says we paid C Cheetah by a direct payment for carriage on goods purchase. Direct payment, CPJ. Okay, money going out of my bank account. Then here it says we received a credit invoice from T Tiger. Again, does it have anything to do with cash? Any money leaving my account? Any money coming into my account? No, it doesn't. So it doesn't affect either CRJ or CPJ. Okay. Then made direct payments. Great. We know we made direct payments, CPJ. Okay. And then it also says, as well as for purchases to be BAM. Now here we actually have two transactions in one line that will end up in my CPJ. Okay, and then this one says issued a debit note to T Tiger for goods returned to him. We are just, again, issuing a debit note. Nothing's happening in terms of money going in, money coming out. So I'm going to ignore for purposes of CRJ, CPJ. Okay, so now we know which transactions affect our CRJ and our CPJ. We have our templates ready and waiting. So now we can go ahead and actually look at the information that's given and start to populate our CRJ and CPJ. So for purposes of, when you're practicing questions and when you're actually doing questions in your assessments and in your exams, it's important that you also structure your answers out, right? It's important that you go through what you have, that you see what's being given, that you look at what the required says, and you actually structure out your answers to say, okay, wait, hold on. If I'm expected to do a CRJ and a CPJ, let's see. Let me first figure out a bit of a template, right? And no one's saying that you have to do it as neat as me on Excel. Okay, I'm obviously presenting to you, so I needed it to be neat. But take a pen, take a paper, open up Excel, whatever works for you, and start making notes, okay? Start jotting things down. You need to be able to have a pen and a paper with you, and you need to be able to be making notes, okay? So you need to be able to structure your answers out so that you're not haphazardly just calculating things, and then obviously you're getting things wrong in the exam. So it's important that you take the time to actually structure out your answers. And for me, that's one of the biggest things that I learned about exam technique. Like when I was studying and I was studying accounting at you guys' level, the reason that I was failing wasn't because I didn't know the accounting concepts. It was because I wasn't applying exam technique. Okay. And I was rushing and I was haphazard and I had absolutely no structure. So when you are doing questions, it's important to have that element of structure. Okay. Sorry, I digressed there, but it was a really important message for me to bring through. So we look at cash sales of 15,640. Okay. So we know that that affects our CRJ. So let's go to our CRJ. This transaction is on the 1st, right? So make sure I'm on the right line. So it's happening on the 1st, and we know that it is relating to sales or cash sales. So your detail is sales or cash sales, etc. Okay. They said to us that our amount was 15,640. So that's actual amount coming into my bank account. So it's 15,640. Okay. Now remember, because I'm making a sale, remember what my colleague said to you just now, when I'm receiving money and I'm making sales, a part of that sale is me owing SARS money, okay? So of this 15,640 Rand, that's not all my money. I need to give some of it to SARS. So if we just assume that Rundu Dealers sells bread, for example, okay? And Rundu Dealers actually sold a loaf of bread to me for 15,640 Rand, as ridiculous as that is, right? But the reality is that when I pay Rundu dealers that money for that loaf of bread, that money is not just theirs alone. That money, a part of it, 15% of it, actually is owable to SARS. Okay. And that's what the VAT output is. So essentially what we need to do under VAT output is we need to say this amount multiplied by 15 over 115. Now, I want to just show you a bit of a trick. Sorry, why did that not work? Oh, sorry, 115. And yeah, I am typing wrong things. Okay, so I just want to show you a bit of a trick as well, and I'm just going to put it down here. Okay, I typed out a little bit of a cheat sheet for you. So if you want to take a screenshot of this, you're more than welcome to do so. But it's just something that helped me get through accounting and really to understand VAT when I was doing it. Okay, so when you're looking at what's inclusive and what's exclusive, and I know there was a few questions, there was a few students who asked me in my group to, when do we actually divide by 100? When do we divide by 115? Like, how do we know what the fraction should be? Okay, this is your little bit of a cheat sheet. Essentially, what you're doing is that you're taking your amount and you're multiplying by what you need and you're dividing by what you have, right? So, for example, if we look at this one that I just did here at the top, okay, I took my amount that was given to me, right? This amount here is the amount actually coming into my bank account. So when I pay for a loaf of bread, I'm paying Checkers 15 Rand for a loaf of bread. That money that they're getting, a part of it belongs to SARS, but that's the full amount that they're getting into the account, okay? So this amount is VAT inclusive, right? Now, if I want to know how much I actually owe SARS, all I need to do is take this amount, multiply by what I need, right, which is 15%, and divide by what I have. And what I have is the amount inclusive. So my fraction is 15 divided by 115, right? If I was given the VAT inclusive amount, so let's say, for example, the question said we recorded revenue of 15,650. Now, remember, when we're recording revenue, what we record in our books is the amount exclusive of VAT. And the reason for that is because we record in our books only the amount that actually belongs to us. We don't record what belongs to SARS, right? When we record revenue, we only record what belongs to us. So if they said to you that sales was the amount of 115,640 in our books, okay, that would be the amount exclusive of that, and then you would multiply by 15 over 100. Why? Because it's what I want divided by what I have. And in that case, I would have had that exclusive amount. Okay, so it works every single time. All you got to do is consider, what do I have? And then what do I need? And then that's your fraction. It's you taking your amount, multiplying by what you want, divided by what you have. So if you wanted to do a quick screenshot of this, you're more than welcome. Alternatively, I can put it into the chat a little bit later for you. Okay. All right. So just going back to this example that I was doing, that's exactly what we did. We had the VAT inclusive amount, right? So because of that, I now need to record my sales. So I'm taking my amount and I'm multiplying by amount by what I want, which is VAT exclusive, divided by what I have, which is VAT inclusive. And that gives me my amount that will be recorded as sales in my books. Okay. Sorry, I just want to pause, but obviously there's no chat. But Zara, I just want to see there isn't any glitches and you can still hear me. My pace seems to be fine. Can I just confirm?
Yes, everything
Yeah.
seems to be fine.
Well, thank you so much for that. I appreciate it. Okay. Right. So that's our first transaction recorded. Okay. Which of our other transactions relates to CRJ? We have a transaction on the 7th. So here it says, received a direct payment from W. Wolf for 1468 in full settlement of his account. Okay. So if we just scroll up to the trial balance, we see that W. Wolf actually owed us 1,583 again. So which means that we're giving him some form of settlement discount. Okay. So if we say equals to 1,583 Rand minus the amount that he's paying us in full and final settlement, it looks like we gave him 115 Rand discount. Okay, so let's go and put that in. The amount that actually came into our bank account was 1,468 Rand. Awesome. So we're going to go there and we're going to put 1,468 Rand. That was the amount actually received. Okay. Now though, remember, he's paying us in full and final settlement of his account, right? And previously, we recorded his amount at the actual amount that he owed us, okay, which was the 1,583. But now, here's where Here's where the complicated part comes in. Let's think about this a little bit. When I initially made the sale, okay, I recorded sales based on 1,583 rand, right? Obviously, at that point, my sales was 1,583 times 100 over 115. But now the problem is that what I've done is I've actually paid that money over to SARS. So I told SARS, I said, I incurred revenue of 1,583 Rand. Here's 15% of it. I'm paying you. Here's your money. Okay, so I've already paid SARS for that. But what happened now is that I backtracked and I gave W Wolf a discount. Okay, which means that the sale was actually lower than I had anticipated. That means that I should actually have only paid SARS 15% of this instead of 15% of the 1,500. So what does that mean? It means that I can actually claim some money back from SARS. Okay, so the difference between the 1,583 and the 1,468 Rand, I can go back to SARS to say, please give me a refund because I've already paid you, but then I gave this guy a settlement discount, so please give me a portion of my money back. Okay, so what does that mean? It means that we need to take the difference between this, okay, and then we need to multiply that by 15 divided by 115. And that gives us a 15 Rand amount that we can go back to SARS and say, please give us our money back. Okay. And, oh, sorry, undo. Okay, thank God for undo. Right. And then obviously with regards to the actual settlement discount granted that we need to record in our books, remember again, we're recording it at the VAT exclusive amount, right? So we're going to say the difference between the two amounts. Okay. And we are going to multiply that. Sorry, I just want to put this in brackets. Otherwise, my formula is not going to work. So I'm going to put that in brackets and I'm going to multiply this by 100 over 115. Whoops. Wrong bracket. Okay. And that gives me 100 Rand settlement discount. So remember, I gave a settlement discount of 115 Rand. Okay. A part of that is coming back from SARS. And so my actual settlement discount granted is 100 Rand. Okay. Just want to go and be as complete as possible. And this was happening on the 7th and it related to W Wolf. So that is my details. Okay. Then I'm going to go back to my information and I'm going to say, okay, what is the next amount that affects my CRJ? The next one said received a direct payment from a Lion for 701 Rand and granted a 69 Rand discount. So in this case, they told us exactly what the amount that was received. We know that a Lion actually owed 770 Rand. And this time they specifically told us what the discount was. So we didn't need to manually calculate it. Okay. But we can easily see 770 minus 69, 701. Okay. So a very similar concept to the previous transaction. Okay. This happened on the 7th. It was in relation to L Lion, and a Lion paid us the amount of 701 Rand into our bank account. Similarly, he owed us 770 Rand. So again, what happened was that I declared to SARS that I made sales of 770 Rand and I paid VAT output at that stage based on 770 Rand. However, I gave a discount. So the amount that I'm receiving now is 701 Rand. So again, I can go back to SARS and say, listen, please give me some of the money back. So again, very, very similarly, I'm going to be able to apply the exact same formula where I say 770 minus 701 multiplied by 15 over 115. And again, in terms of my settlement discount, exact same formula, 770 Rand minus 701 Rand multiplied this time by 100 over 115, because this time we want the VAT exclusive. We have the VAT inclusive. So again, it's what I want divided by what I have, 100 over 115. Okay. Back to my information. What is my next transaction that affects my CRJ? Okay, so it says sold an old computer to old for 299 Rand and received his direct payment for the amount due. Awesome. Amount in my bank account, 299 Rand. This relates to old, and the transaction actually happened on the 14th, if I remember correctly. Okay. Remember, it doesn't tell us what Rundu Dealers actually sells, but it basically says to us that we sold him an old computer that we used to use. So that was essentially equipment inside of the business, right? So we all have, when you're actually working, you have a laptop that you work on, right? So that laptop actually belongs to the business. Once it gets old, the business will sell the laptop and try and make a little bit of money there, right? So it's not a sale because it's not part of the normal course of business, but it is still considered a sale in terms of SARS. So SARS still says, hold on, you've gotten money into your bank account for something that you sold. I want a part of that money, okay? But from our purposes, it's not revenue. It's actually a reduction of your equipment, okay? So what I'm going to do is I'm going to go and record that reduction of my equipment at the VAT exclusive amount. So I'm saying 299 Rand multiplied by what I want, which is VAT exclusive, divided by what I have, which is VAT inclusive, and I reduce my equipment by 260 Rand. Remember, I still owe SARS money. So from SARS perspective, I need to pay 15%, right? So it's multiplied by what I want, which is 15%, divided by what I have, which is VAT inclusive. And that gives me the amount that I actually owe SARS, which is 39 Rand. Okay. Right, back to our information. What is the next transaction that actually affects CRJ? Here it says cash sales, 6,900 Rand. So exact same as the transaction on the first, cash sales, 6,900 Rand. Amount in my account, 6,900 Rand. This happened on the 14th as well. And this was relating to a sale or cash sale. You can call it sale or cash sale, whatever you prefer. Okay. In terms of the actual sale that we made, remember when I record the sale in my books, it needs to be at the VAT exclusive amount. So multiply by what I want, which is VAT exclusive, divided by what I have, which is VAT inclusive, and that's my amount. And then obviously my VAT input is going to be the difference between that, but it's essentially my VAT inclusive multiplied by multiplied by what I want, which is 15, divided by what I have, which is my VAT inclusive, and that gives me the 900 Rand. So to test yourself, you actually need to see, does my amounts on this side then equal to my amount on the other side? Remember, it's 15% plus VAT inclusive, plus VAT exclusive gives us our VAT inclusive, right? So VAT plus amount exclusive gives us 115. So you should actually see, does your transactions then equate to each other? So 13,600 plus 2,040 gives us 15,640, which means I've done the calculation right. Okay, so you should be able to test yourself in that way as well. And guys, that's essentially our CRJ. Okay, I'm going to go through the CPJ as well, and then we will take questions. So I do see the hand. Willem, can I please just ask that you note down your question if that's okay? And then I will get to it as soon as we do take questions. Okay. Okay, cool. So moving on to the CPJ, right? We've already gone and marked which of our transactions affect our CPJ. And the very first one was on the 5th. And here it says that we paid the account of T Tiger by direct payment after we deducted an amount of 115 Rand, which is a discount. So in this case, T Tiger said to us, please pay me my money and I'm willing to give you 115 Rand discount, right? We owed T Tiger 2,310 Rand. So equals to 2,310 minus 115 Rand discount, which they're willing to give us. Essentially, we are paying them now 2,195 Rand. So the amount that's getting out of my bank account is 2,195 Rand. Okay, so let's go put that in. 2195, transaction happened on the 5th, and it relates to T Tiger. Okay, it would be helpful if I could spell right now. Okay. And then remember it said that this was in full and final settlement of our account, right? So very similar concept to the top, except in this case, it's us actually paying money to our creditors, right? So again, it's going to be equals to, and I'm going to take this, I'm going to sorry about that. My laptop's just doing something weird. Please give me a second. Sorry, it's like doing its own thing. Remember that we actually owed, I just want to double check, it was 2,310. So we actually owed 2,310 Rand, right? So that was the amount that we need to reduce our trade payables control account by. And then we got our VAT output. Now, similar concept here as to what we explained on top, right? We made purchases of 2,310 Rand. And at that point, we went to SARS and we said, listen, we purchased goods for 2,310 Rand. Please give us 15% of that as VAT input. Okay. So SARS would have said, okay, cool. Here's your 15%. Take it, go. Right. But now, unfortunately, what happened is that T Tiger wanted his money. So he said, listen, please pay me my money. I'm willing to give you 115 Rand discount. But now the problem is that we should not have received so much money from SARS because we only made a purchase of 2,195, whereas we told SARS that we made a purchase of 2,310. So we now need to go tail between our legs back to SARS and say, listen, sorry, please, here's your money back. So here's a little bit of your money back. Okay, so we need to record this as VAT output. So what do? We say equals to difference between these two amounts. So equal to that minus that. And then we multiply this by your 15 over 115. Again, what I want divided by what I have, right? And then your settlement discount is going to be the difference between the two amounts again, this time multiplied by 100 over 115. Again, what I want divided by what I have. Okay, and again, very similar to the top, we see that the actual settlement discount received is recorded at VAT exclusive, which is 100 Rand. And then the VAT output that we need to go back to SARS and say, listen, sorry, here's your money, here's 15 Rand because of the discount that we received, right? So we are claiming, we're recording that as VAT output to show that we actually owe SARS this amount, which is 15 Rand. Okay. Right, let's go to the next one that affects our CPJ. So we've sorted out that one. Our next one would be this amount here, which says paid C cheetah by direct payment for carriage on goods purchase. Now, carriage on goods purchase is essentially like a delivery fee, okay? So we paid for this 1,150 Rand. That's the actual amount leaving my bank account, so 1,150 Rand. This happened on the 23rd, and it relates to money that we paid to C cheetah. Okay, this now is not, even though we purchased goods, this money that we were paying, which is the 1,150, is not for the actual goods. It actually relates to the delivery fee, okay? So we need to actually record this under sundry accounts, which is other accounts that obviously don't appear here in your actual CPJ. So in this case, the actual expense that we are going to be recording it in is carriage on purchases. Sorry, carriage on purchases. And my amount here is going to again be VAT inclusive. Remember, this is hitting my books now. So it's hitting my expense line item and it needs to be VAT exclusive. So it's equals to 1,150 times what I want divided by what I have. And that's the amount that I actually record as expenses in terms of carriage on sales, right? Because it is an expense that I incurred, I can go back to SARS and say, listen, I incurred an expense in purchases. Please give me some of that money back. So we're going to say equals to 1,150 Rand times what I want divided by what I have, which is multiplied by 15 over 100. And that's the amount. Sorry, 115. I said 115, but then I actually went and typed 100, which is really stupid. And that's essentially the VAT input that I'm allowed to claim on this transaction. Okay. Next one that affects CPJ, right? We have two transactions here that are affecting CPJ. The one says made direct payments for salaries and wages of 5,746. Cool. So on the 29th, we paid salaries and wages, so it's cash, and we paid the amount of 5,746 Rand. Now, okay, what we need to note is that salaries and wages is it falls outside of the scope of the VAT Act. And for that reason, we don't need to pay SARS. We don't need to claim from SARS. Essentially, when it comes to salaries and wages, we completely ignore VAT because it falls outside of the scope of the VAT Act. So in this case, it's just money in my account, money for expenses, and my expense here is actually salaries and wages. Okay, so it has absolutely no bearing on VAT whatsoever. So we record what comes into the bank, we record the expense at the exact same amount because there's no VAT that needs to be taken into consideration here. Okay. On that same day, it also says that we made direct payments for purchases from BBM for 8,050 Rand. Cool. 8,050 Rand into my bank account, please. Right? Oh, sorry, outside of my bank account. This is cash payments. I'm confusing myself now. Okay, so bank payment being made for 8,050 Rand. Because it's a purchase, I'm going to record it as purchases. And again, this is going to be VAT exclusive, right? So multiplied by what I want, divided by what I have, okay? And then obviously my VAT input, because I'm making a purchase, I'm allowed to go back to SARS and say, hey, listen, please give me some of my money back, right? So I can go there and multiply my amount by 15 divided by 115. Oh, sorry, 115. Yeah, I am making human errors now. Okay, and that gives me the amount of 1,050 Rand that I'm allowed to claim as VAT input. Okay, essentially, this is then your CRJ and CPJ complete for the month of March. In total, we have VAT input to the amount of 1,200 Rand and your total VAT output to the amount of 2,979 Rand. And it's at this point that my colleagues will then take over, unless, Sarah, do you think that I missed anything and that there's anything you wanted to add?
No, there's nothing that I would like to add. However, I think we should take a few questions
Yes.
now.
Perfect.
Clara or Joseph, would you all please open the chat? Just so if anybody has a few questions in the chat, that would be great.
Thanks, Sarah. I just want to check from my colleagues on the call because obviously I don't want to take up too much time that we then don't have time for the rest of the remaining parts of the question. But is it safe to say we do 5 minutes for questions and then we move on and come back at a later stage then?
Happy with that.
Okay, cool. All right, questions. I do see a hand. I'm just gonna go to my people so I can see the names. Oh, okay. For some reason, it's not. Oh, there we go. Moses, you first. I just want to see if I can unmute you. Give me a second. Okay, you can unmute now. Moses? Moses going once. Okay, guys, when I allow you to
hear me?
unmute. Oh, yes, I can hear you. Yes, I can hear you.
Yeah, I think my mic took long to open.
No worries.
Aisha, I've joined the meeting late and with the network coverage, I couldn't hear a thing what you have just said from earlier on. I just see now, since you were sharing the screen, how you did the CPR, the CJR and the CPJ. Can you, if you have time, can you start afresh so that I can much understand it on how to do those transactions?
Sure. You know,
And how you can spot
Sorry.
sorry?
No, sorry, you were saying?
And also, how do you spot a transaction, whether it's CRJ or CPJ from the statement given?
Okay, so I would honestly love to assist you, but I am on a very tight time schedule. So I want to suggest that please go back to the recording when the class is over today and go and watch the recording because I do cover all of that in extreme detail. And for the interest of everyone else on the call as well, it wouldn't necessarily be fair for me to explain everything twice. So please do watch the recording. And then if there's anything that you're still uncomfortable with in terms of what we've covered on the recording, you can reach out to your e-tutor on your e-tutor site for any questions that you still have at that point.
All right, thank you, Nasir.
Cool. Okay, then I'm going to take a question from, I don't know what the name is here, but it comes off as X Sibanyoni. So you can unmute now. Okay, there we go.
Good evening, everyone. I hope I'm audible.
Yes.
My question, I have two questions. One with regards to the cash receipts journal.
Mm-hmm.
The transaction where from the 7th, where W Wolf was paying or was settling their account.
Yeah.
My question is, if the full settlement amount is less than the amount on last month's trial balance,
Mm-hmm.
do we then automatically assume that the surplus is a settlement discount inclusive of its VAT?
Yes.
Oh, okay.
Yes, absolutely.
And then my second question is with regards to VAT. So if like in this question, it is not specified whether it's VAT inclusive or VAT exclusive. So if it's not specified, do we then assume that it's VAT inclusive?
No, not necessarily. So I think because I think I wrote down a little bit of this an example here, right? Which I'm happy to put
Okay.
into the chat at a later stage. But essentially, if we think about something like bank or debtors, right? We're always going to be recording bank or debtors at the full amount meaning VAT inclusive, right? Because that's the
Okay.
amount that's actually owing or the amount that's coming into our bank account. So majority of the time, your bank and your debtors is going to be your amount inclusive of VAT, right? Your VAT is
Okay.
obviously itself 15%. But then the amount that gets recorded is a purchase or as a sale or as a settlement discount. So anything that's not debtors or bank, but something that is an expense or an income account, right? Like for example, purchases and sales, etc. That needs to be
Yeah.
recorded at VAT exclusive, which is the 100%, right? So in this
Oh,
case, if we
okay.
just look at the information that was given, it says cash sales of 15,640. So this is the amount that's actually coming into my bank account. So if I understand this, right, it means that because they're giving me the bank account or the bank, the actual amount that's coming into my bank, it means that automatically this, in my mind, should trigger that it's the VAT inclusive amount. Okay.
Oh, okay.
If the question had said we recorded
Sorry, Nasmira.
Mhm.
Sorry.
Okay.
The students are saying you're too fast. Can you slow down?
Okay, sure. I can try and do that. Cool, thank you.
Thanks.
Sorry, so I hope you've been with me so far in terms of answering your question.
Yeah, just to go through, you're saying if, for example, the 15,640 is a
Mhm.
is a bank amount, and
Yeah.
so it is inclusive of VAT because
Correct.
it's a bank account, as opposed to like when they said maybe it's a revenue
Correct.
amount, that would
Correct.
mean that it doesn't include, sorry, yeah, it doesn't include VAT.
That means that what they're giving you is the VAT exclusive amount. Correct. Yes, correct.
Oh, okay, thank you. No, I follow. Yes.
Okay, perfect.
Yes.
Mhm.
Sorry. Can you just zoom in onto your Excel? The students are saying that they cannot see your Excel.
Okay, is that a bit better?
Yeah, that is better.
Okay. Cool. Sorry, I just want to ask my colleagues on the call because I know that we almost an hour in and we obviously have still quite a bit to do in terms of this this example. So do you guys want me to carry on with questions? But I see there's now a lot of hands that have been raised and lots of stuff coming through in the chat. So do you want me to carry on with questions? I'm just scared that we will run out of time, or can I hand over to the next person and we see if we need to come back to the questions at the end then?
Yeah, I think we should go to the next section and then we'll come back if there is time at the end.
Perfect.
I will try to I was going to say I'm going to try to address the questions in the chat, but it does take away from the presenter. So
Yeah.
I will respond to questions after after the session, if that is fine.
Yeah,
Perfect.
I also think some of the questions will get answered as the class progresses. Like I think the one was asking about VAT control, and I think VAT control is the last section.
Yeah.
So some of the questions will get answered. But I think also some of the questions might apply to the other sections. So I think even if the questions are kept, I think they will still get answered at the end.
Perfect. So well, my suggestion is going to be that I hand over to the next presenter to carry on with part C, etc. And that we then do questions at the end then.
Okay, no, that's
Cool.
fine.
Okay.
And then there'll be more time at the end for more questions.
Absolutely.
Yeah.
Okay, so that's it from me for now, at least. Can I hand over to the next presenter?
Yes, so I think it's Mpho. So Mpho will do the sales journal, which is C. I will do purchases journal, which is D. And then Mpho will do the sales return to just link with the sales journal. And then I will do the purchases return journal. And then after the general journal, then we'll open for questions again.
Thank you, Zulu. Thank you, Asmira. Yeah, I'll be doing. Tell me if you guys can see my screen quickly before I start.
Yes, we can.
Yeah, similarly to what Nasimira did, I also now put the transactions here for you guys' convenience. So as she was working through the questions, I eliminated for you guys everything that she has covered. So obviously, when you get your required and your questions, like she said, you sort of have to keep which transaction relate to which journal, right? So obviously, because covering the sales
Sorry,
journal, that will be, yeah.
sorry, sir, can you try to zoom out? Just to,
Okay. Can you
thank
guys see
you.
now? So it's proper.
Not yet.
A
Unless if
little
it's
bit more.
more, yeah.
Or zoom in.
Yes, zoom in.
Mm,
It's fine.
okay. Yeah, that's better. Thank you.
Yeah, there's a delay there a bit. But yeah. So as I was saying, as you go through your question and you go through each transaction, you sort of have to link which transaction relates to which journal. So obviously in a business, you have a bigger portion of your payments and your receipts, right? That obviously you're gonna eliminate those ones. And then the ones that she obviously left out, we sort of have to link to the other required, right? So if you go now to um, transaction number 13, that's the it just said the credit sale. So I feel like this type of questions where you have to maximize your marks because it's just straightforward saying to you is a credit sales. That will mean then you'll have to record it into your sales channels. Obviously, there might be a question why you won't record your cash sales into the sales channels because they relate to sales, but obviously cash sales go to the cash receipts. That is because it's a direct cash and it's gonna hit your bank account straight up. So on the 13th, they say that there's a credit sale that relates to customer a lion and W wool, right? So you then have to go into your sales channel. Obviously, this is Excel for convenient purposes, but you're gonna put it there in your details, the name of your customer. Um, then you have your columns there. You have your bet output, and then you have your sales, and you have your trade receivable. So if we go back to the transactions, we look at the amount. The amount is 2.3 thousand, and that would mean then they made a credit sales of 2.3 thousand. But what are we looking for here? We're looking for the VAT out, right? So we now have to um, calculate to get the VAT output. That would mean we have to take the 15%. The amount is inclusive, right? Inclusive of VAT. So the 2.3 thousand multiplied by the 15 over the 115, right? And um, that would give you um, your VAT output amount of the 3,000. So now you need the sales amount, right? So if you check now, if you go to the same amount of 2.3, you take the 2.3, you're looking for the sales amount. That would mean you have to take out the VAT out of the sales amount and record that exclusive of the VAT. So you have to put in 100 over 115, right? And then the two, when you add the two together, you have obviously your trade receivables. That is the amount that is owed to you. That is the total amount that you're gonna receive, which is the 2.3. And on that amount that you receive, obviously, the 2,000 is yours, and the 300 is what you have to take and pay over to SARS. That's not your amount. You're basically just collecting that amount and paying it over to SARS. That's the reason you actually have to separate the transactions between the sales and the output. In the interest of time, if you want to be obviously under exam conditions, you
Is it just me or or is Mpo
take this
Disappearing.
2.3. If you take 3 and
Mpo?
3,
Or
Sorry, we actually lost
Yeah.
you for about 30 seconds there. I don't know if you maybe can backtrack a bit. I think your network dropped. Mpo, you there?
okay. Okay, am I audible now?
Yes, yes, now you are. Yeah.
Can you guys hear me now? Can you hear me now?
Yes, I can hear you. Mpo, we can hear you.
Hello, colleague. Can you hear me? Sorry. I think there's a lag there. Hello, colleagues.
I
Yeah,
can hear you. I'm starting to wonder if it's me now.
no, we can hear you. We can hear him.
Okay.
So I think Mpo, if you hear us, we can just continue. I think we agree there's
Okay,
a lag.
yeah, I can
Yeah,
hear. Okay.
yeah, you can.
Am I better
Yes.
now?
Yes.
There's only can you hear? Okay. Yeah, so
Yeah.
I was just saying in terms of exam technique again, right? If you calculate your VAT output and then you're trying to save time, you can just take your total amount there and then minus your VAT output. Obviously, you're gonna get your sales amount, or you take your sales amount and then your total receivable minus your sales amount, you're gonna get your VAT output amount, either or, just so you can save time. So I'm gonna go to the second transaction. Second transaction also, I mean second customer. There isn't much said there. You just know that this is a credit sale. So total amount is the 1150. So when you record it to the sales journal, you just have to obviously write the details of the customer there, and then you're looking for the VAT output amount. So the VAT output amount so that would be 115 1150 and you times by the 15 over the 115, right? And that would give you your output amount. So like I said, with the interest of time, you can go, because this is the trade receivable. The trade receivable amount you can set one time or write it down on your answer sheet one time, just so you can maximize on your mask. And then you're gonna take that receivable, then minus the 150, then you get your sales amount, right? So this is how you obviously record your on your sales journal, and then you can sum everything off. So this would be your total of the VAT output, and then your total of your sales, and then your total trade receivable. So you actually need to total it, because some of this amount they link to other parts of the require. So as soon as you do see your required, you have to sort of fill in all parts of the question as you go, because you wouldn't want to go down and then when you get there, you realize you actually need the total VAT output amount, but you haven't actually calculated the total. Yeah, so you just need to be strategic about answering these questions. Yeah, but that's how you go about recording all the sales journals. Just remember that just the credit save that will go in here. Yeah, but I'll hand over to Zoli to do the purchases journal there quickly.
No, happy. I'll just share. I noted that there's a complaint about the Excel, so I'm going to share my one. And can anyone just confirm that the Zoom is adequate, or it's not too small?
It's fine. I can see quite clearly.
Okay, no, perfectly. So I'll go through the purchases journal. So I think the first step, I think Nazmira has sort of assisted with, is you sort of go through all of your transactions And then as you go through your transactions, you identify which transaction relates to which journal. So with the purchases journal, I think the question was a bit too kind also. I don't think the exam question would be that kind, where they even highlighted some of the words. But I think they're sort of helping students with how to think as you read through the questions, where as you're reading through the questions, certain words should stick out, and then those words should help guide you in deciding where or how to treat the transaction. So with this transaction, it says received a credit invoice. So you bought something on credit from T Tiger for goods purchased for 14,720. So usually they always say start with the easy marks. So you put in the date, that is the 28th of March. And then the supplier is T Tiger. And I think the first thing, which I think also Nazmira did mention, is I think with that, you also need to sort of determine your whole own strategy of how to sort of work out the VAT amount from the VAT inclusive amount. So I think in this example, so I also did quite a similar thing where I tried to just have notes included instead of typing them, which would take time, where with any VAT purchase, there's always the purchase price excluding VAT, which is always 100%. There's the VAT, which is 15, and then there's the total purchase price, which is 115. So in this scenario, the purchase price, which is what when you go to any business and you see a price, that price most of the time, well, 99% of the time, it's always an inclusive of that amount. So in this scenario, the 14,720 is the price inclusive of that, which means it's the price at 115%. So to work out, so what I prefer to do, again, everyone has their own method. I always prefer to first do the workings on the side. So I think from this, what's below the black line, it's just my own notes for this class. But I think in terms of exam, these would be the workings that as a student you would do. So you could either determine what the purchases amount is or the VAT. I think for the interest of the class, I'll show both. So to work out the purchases price, so we know that the purchases price is 100%. The total amount is 115. So to work out the exclusive of that amount, we would include the total amount and then divide that by 115 percent, and then times 100. I think quite important here, I said 115% divided by times 100%. This is the same as dividing by 115. So I know different people will have different methods, but I just want to show both to show that they both work the same way. So in our example, we know that the purchase or the invoice amount that we purchased for is for 14,720. We've just worked out what the purchases amount exclusive of that is, which is 12,800. So obviously in an exam scenario, you then would just deduct the total amount from the purchases. But I think for the interest of the class, the other alternative is to also work out oh, sorry, I was reading something. So maybe let me show this working as a working. So the calculation would be 14. Sorry, I'm just realizing that with Excel, the calculation disappears. So I'll just write it out in full on the side so that it is visible if you are sort of working on a paper. So the purchase amount would be 14,720 and then divided by either 115% times 100, or you can do, sorry, 110, 14,720 divided by 1.15. So both of these calculations would get you to the same answer because 115% divided by 100 is 1.15. So this formula relates to this amount, and then this one relates to this one. But I'll just, or maybe let me do it like this, sorry, so that it doesn't look too far off. Hopefully that makes a bit more sense. So that is working out the purchases amount exclusive of that. The alternative is, so I think obviously in exam scenarios, you would just subtract the VAT, but if you wanted to work out the VAT on its own, so the VAT, you'd take the total purchase price, inclusive of VAT, which is the 115, you would divide 115%, and then you'd multiply by 15%. So the first step of taking the total purchase price of 115 divided by 115 takes you back to 100%, which is the purchase price exclusive of VAT. And then to get the VAT amount, you then just multiply by 15. So for the purpose of this, I'll show both where I'll do it in Excel as a formula, but I'll also just show the formula above so that it's easy for someone who is writing on a piece of paper. So it will be 14,720 divided by 115 to get back to the purchase price excluding that, and then multiplied by 15%, and then that would give us the VAT input. And then I will didn't put that. And then just to work it out for the equation. Yeah. So I think that what I was trying to show here is that you can work out the VAT by itself, or you can work out one of the amounts and then subtract the total amount from the amount you have. So you can either work out the VAT input and subtract the total trade payables from the VAT input to get the purchaser's price, or you can work out the purchaser's price and then you take trade payables minus purchases to get the VAT input. So that's the trade payables. Okay, I'll switch back to Paul to do the sales returns.
Yeah, thanks, Zuli. So let me reshare. You guys can tell me and you can see. Can you guys see?
Still coming.
Can you see now? No.
Nothing yet. Yeah, you can see now.
Okay. Yeah, so I'll be covering the sales return channel there. I tried zooming in. Is this format proper there? Okay, so on the sales return channel, we're gonna look at transaction on the 21st of March, that is. So if you read that transaction, says the entity issued a credit note to L Lion for an overcharge on the invoice of the 13th. So remember we did, am I audible? Can you hear me easily?
Yeah.
Okay. Yeah, so now we had an overcharge because we overcharged the customer on the 13th. Remember when we made the sales here, one of our customers is L Lion. So we issued then a credit note on the 21st to L Lion for an overcharge on the 13th. And that amount in totality is 6,900. So one of the trickiest things here is actually the jargon that's being used. What most students tend to be confused by is the credit note and the debit note. So you obviously need to know which one relates to what. So the credit note is obviously issued to a customer, informing them that you know what will actually refund you whatever amount that we overcharge you by, or if there was something that went wrong with the invoice, and then you sort of have to refund the customer. You have to now issue a credit note. Yeah, so they issued a credit note of 69 rand. So obviously, because of we're trying to be efficient, we're now gonna go and set a Lion there. But one of the amount that you can trade up put into the column is the 69 rand, right? And on that 69 rand, we know we need the sales return amount, and then we need the VAT output amount. So can then calculate the VAT output being the 69, then we times that by the 15 over the 115, and then we're gonna get the 9 rand. So that 9 rand actually is the reverse of the VAT output that was charged to the client. It's not necessarily an input, but the concept of how you would treat it is similar to an input, right? But it's not an input. You're just reversing what you initially charged the client, right? And now you'll have that 9 there as you issue that credit note, and then for efficiency purposes, we don't need to calculate the sales return. We can take the total of the trade receivable and then less the VAT. Then we get the 60 as the sales return. And then we can sum up everything there. Then we can then close it out. Yeah, I think that summarizes the sales return channel there. I don't think there is much relating to it. I mean, it won't have the quantity of transactions like all your sales and everything, because that won't happen like again and again. It's just an occasional thing where you would overcharge or make that mini mistake when you're invoicing someone. Yeah, but that sums it up. I'm just gonna hand it back to Zoli to go through the purchases return channel there quickly.
Thank you. Just let me know when you can see what I'm sharing. Is it showing up?
Yes, we can see your screen.
Okay, thank you. I've just quickly jotted down the formulas, but I'll talk through them because I realized that when we do the calculations in Excel, once we leave the cell, people can't see the calculation. So I've shown the Excel calculation, and then on top I've shown the actual workings, so that at least there is some visibility on how the calculation was done. So moving now to the purchases returns. So I think on the question, again, having gone through the process, we then get to the 30th of March, which states that we issued a debit note to T Tiger for goods returned to him for 805. So this means, so if you sort of remember, initially we had purchased goods from T Tiger. So T Tiger is our supplier. So it's either we bought more than we needed or some of the goods were damaged. The question doesn't mention the reason, but usually there's various reasons for returning goods once you've bought them. So we return goods that are worth 805. So it means, again, based on the question, we'd assume that this is inclusive of VAT. I think just before I get into the calculation, so I think another thing worth noting is it says issued a debit note. So I think it's quite important to keep in mind that when you do a purchase, you would have a credit invoice, but when you are then returning goods, so which is sort of the reversal of the initial transaction, you then issue a debit note. So I think it's always important to notice that when you are making the purchase, it's a credit note, but when it's returning, because it's the reversal, it's then a debit note, which again also means when you are accounting for it, you would have to debit the trade payable because now you're owing them less. But sort of filling in the purchases journal, so we'd start with the date, which is the 30th of March. The supplier is T Tiger. And then before inputting the details for the VAT input, the purchases returned, and the trade payables control. So again, I think for me, it's always ideal to start with the workings. So in this scenario, we are aware that the 805 represents the total purchase price that's being returned, which is the 115%. So to return to the purchases amount exclusive of VAT, you would take your 805 and divide it by 115%, which is the purchase price, and then multiply it by 100 to get to your purchases price exclusive of VAT, which would be 700 Rand. And then here we've just done the same calculation in Excel. And then similarly, you can also just divide it by 1.15 because yeah, it's the same thing, 100 divided by 115. So in this scenario, our purchases amount total exclusive of VAT, and what the debt is reducing by, or how much we owe the creditor less, is the full 805 amount inclusive of that. But then for our internal books, we'd then have to split this between what is the purchase price exclusive of that, which is the 700. Then for exam purposes, you can quickly do a case where you take the 805, which is the total amount, subtract the 700 to get to the VAT amount. Or alternatively, you can also just work out the VAT amount. So to work out the VAT amount, you would take the full purchase being returned, which is 805. You divide that by 115%, which is the total purchase price, and then which gets you to sort of the price exclusive of VAT, and then you'd multiply by 15%, and then that would get you to your VAT amount, which is the 105. So the 105, you can work it out by either subtracting 805 minus 700, or you can work it out by calculating it. But again, the quickest solution, or the one that you're more comfortable with, I think that's usually the better one. I think that's it for purchases returns. We will do the general journal, and then we'll open up for questions. I think for sales journal, purchases journals, and the returns.
Sorry, I don't want to be a bit of a party pooper, but I'm considering the time that we actually have, which is about
30
just
minutes.
over half an hour left. And I'm
Yeah.
wondering if maybe we mustn't do the next two parts as well and then open up for questions all at once. I'm just a bit of my 2 cents, but I'm just a little bit worried about the time at this point.
Yeah, no, I think I do understand. No, I think I also support that.
Okay, cool.
Yeah, but I think again, for anyone who has questions, I think please do note them. Then we'll try and address them once we've gone through part 2. Okay. Morris, yeah, I think Morris, are you gonna do 1G?
Yeah, 1G has got one entry for the 12th, which is a, can you see it from your side?
No. Are you presenting?
Eh?
No, are you presenting? Have you shared your screen?
Have I did what?
Your screen.
How do I clear my screen?
So Maurice, next to the leave button at the top top right corner, there's an arrow that says share.
Okay.
So you need
Then
to
you must.
need to
Okay,
sorry
you
there.
have to-
No, that's fine.
That's fine.
You need to click on that share button and then share your screen.
Okay. Are you able to see it now?
No,
Not
not yet.
yet.
Yes.
No.
So when we did presentation with Letitia, we used her laptop. So I thought that you have to use one laptop. I didn't know that every person has to use their laptops. Can you see now?
No.
No. Okay. Would you like me to present for you then?
Yes, I would appreciate. It's only one entry.
Okay, I'm going to present for you in a minute. Okay, can you see my screen?
Yes, I can.
Okay, so your
Just
part
go
is the
up
general
to the
journal,
12.
correct?
Go up to the 12. Yeah. You see that entry there? It says received an account from Stationers Limited for printing of documents on, and then it put in the number. The amount of 690. But basically what it's saying is that we bought that at on credit. So you debit the stationery with 600 and VAT with 90 and the trade payables with 690. To get to the 600, you have to divide the 690 by 1,5. Sorry, by 1.15. And then that will give you the 600. And then the 90 rands is the difference between the two. And then on the 31st, although there's no obvious question, but basically on the 31st, that's when you write off the input and VAT output to the VAT control account. You see that? The 5844 is all the VAT outputs on the transaction above, and the 6360 is all the VAT input from the above. Can you see that? Can you hear me?
Yes, we can hear you, Morris.
Yes.
Yes.
I'm saying those amounts are the total of the VAT output and VAT input as per the journals above. So the difference between the VAT output and the VAT input would be the amount that is payable to SARS. Am I making sense?
So, Morris, the students cannot respond as they have been muted.
But I see questions there.
Okay, I'm sharing my screen, so I cannot see the questions that you are seeing. Do you have anything in addition to add?
No, I don't.
Okay, thank you then. So we are now done with part A, or question 1. We'll be moving on to question 2. Okay. Okay, who's presenting question 2?
It's Tanda Zile. I think she's trying to unmute. She's having an issue with unmuting, so I think she's trying to sort out that technical issue. Okay, I think she's gonna leave and then rejoin. Or she's asking that maybe we take a few questions in the meantime while she's still to sort of use the time use the time. So Hira, are you gonna pick
Sorry
who-
about that.
I think
I was
question
talking
is
and I was
Tandasi.
muted.
Yes, no, Tadazile is jumping out and back in again.
Yeah, okay, so I'll take I'll unmute people and let them ask their questions, and let's see how we can do this. Okay, Hendrik, I am unmuting you. Please ask your question.
Hi everyone, I hope I'm audible. Sorry, I'm just gonna backtrack a bit to uh, Nazmira's discussion, or the earlier when she presented. I'm just a bit lost in terms of how she got to the point where in one transaction should only work on input VAT and then the next should work on output VAT. I'm just not too sure how to differentiate between the two when it's between CPJ and also CRJ, because the transactions are the same, but on some should just work on the output and not the input, and on the others should work on the input and not the output. I just need maybe clarity on that. I don't know if I'm making sense or if my question is clear.
I'm happy to take the question, Sarah. So I think the reality is that you first need to understand, what VAT input is and what VAT output is. And so VAT output is essentially, when you make a sale or when you getting money into your business through your normal ordinary course of business, through sales, etc. Essentially, you need to give some of that money that you're receiving. You need to take that money and you need to hand it over to SARS because not all of it belongs to you, right? And that's essentially the VAT output. VAT input is, however, when you're incurring expenses in the normal course of your business, like, for example, purchases of goods, then you're allowed to claim that back from SARS. So SARS gives you a little bit of a break at that point and says, okay, you're paying us every time you make a sale. So when you have an expense, we'll give you a bit of a kickback and give you some money back for this part, right? So the reality is you need to understand first the difference between VAT input and then VAT output. And so, for example, if you think about now your CRJ is where you would record majority of the time your sales generally, right? In that case, you would think that by default, you're going to be using your VAT output column. But the reason why I used the VAT input column for, I think it was 1 or 2 transactions there, was because in that case, it was where we were getting money back from a debtor, right? And because we were receiving money, we might have said to the debtor, please pay us now, we'll give you a discount, okay? Now, the reality is that when initially that debtor bought from us, what happened at that point was we recorded it as sales, and then obviously at that point, we paid SARS money, okay? So it was the initial transaction. But now the subsequent transaction is that the debtor is paying us, okay? So that normally would not attract any VAT. However, because we gave a settlement discount, right? That settlement discount attracts VAT. However, it attracts VAT from the opposite end, because unfortunately, the debt is now paying us less, which means that our revenue should have been less, and therefore we shouldn't have paid SARS as much. That's the reason why in that case, it attracts VAT input. Okay, so you need to think about it from the perspective of what would have initially been recorded. And now because of the settlement discount, I obviously need to get some money back from SARS. So that's the reason why in that case, I'm using the VAT input account. So I think what you need to do is maybe just go back to the recording of where I was presenting that in Excel. But I see Zara's also posting in the chat where I've specifically answered this question as well, where I tried to type it out. But yeah, have a look at that, and then obviously if you're still struggling with it, you can reach out to your e-tutor specifically. But yeah, it's about really just understanding the basics of when to use, what does VAT output mean, what does VAT input mean, and then really just logically thinking about the transaction at hand, what would have been the initial thing, what's happening subsequently, and kind of just thinking about it logically as to whether this attracts input VAT or output VAT. I hope that helps.
Thank you, Nazmira. Okay, so I'm going to take the next question. It's from
Thank you. That does
Master
clarify. I think the initial assumptions that VAT has already been paid.
Sorry. Was somebody saying something?
No, I think Zara, we just got a response to my answer just to say thank you. So I think you can carry on.
Oh, okay. Sorry. Marceline Joyce, I've unmuted you.
Hi, hello. Good evening.
Evening.
I have two questions. The first one is referring to exercise 5.2, the first entry by T Tigers. I wanted to find out if the method that Miss Nazreen did, if I could do it a different way by, is it possible to determine the VAT output amount by finding the VAT on both the amounts in the bank and the trade payables control, and then subtract and then find the differences from there? Is that possible?
Yes, absolutely. So remember I said that in order to, sorry, Zara. Remember I said that in order to check yourself to see whether you're actually applying the fraction correctly, is to say, what is my VAT exclusive amount plus my actual VAT amount, which is the 15%, and that should give you your VAT inclusive, right? So if what they're giving to us in the question is the amount actually received into our bank account, and you then use that amount to actually calculate the VAT exclusive, you can then just take your VAT inclusive minus VAT exclusive, and that gives you the 15%, which would be the VAT input or output. So you don't have to apply the formula in each and every single circumstance. If you've calculated one, you can then just do the difference between the two, and then you'll get the other one.
Oh, okay. And my last question is, why is the 115% of of an amount in a transaction, if it's whether it's a debtor or a creditor, why does that 115 go into the trade payables, or if it's debits goes into the trade receivables?
Sorry, I'm not sure I'm really understanding the question, but I think a bit of a cheat that you can think about is, again, that that cheat that I gave to say, think about what you want and think about what you have, right? And majority of the time in the question that I was doing, what we had was the VAT inclusive. So because we have VAT inclusive, majority of the time we were dividing by 115, right? So that's the reason why you would divide by the 115, even when you're calculating the amount that must now go and be posted to your trade payables account or to your purchase account, etc. It's because the amount that was given is the amount inclusive. So that means we have to divide by the 115. I'm not sure if I'm understanding the question right, so whether I've answered it correctly, but if I haven't, Sarah, maybe you can assist.
I can maybe add.
Perfect.
So I think with VAT, so VAT works with the system of, as a business, you are selling something for an amount. So VAT always adds on top of that amount. So the calculation will always be the amount exclusive of VAT will always be 100%, but the amount where VAT has been charged, or there's VAT included in the amount, that will be 115. So to make a simple example, if you were to go and buy a computer from Apple Store, when you buy the computer for 25,000, in the 25,000, they already have included VAT. So that amount is already at 115%. So for you to work out what is the amount exclusive of VAT, you have to already assume that amount includes the VAT. But if you are now at Apple Store and you are selling the computer, you'd first determine what your sales price is, then you'd add VAT on top of it. So I think the question always is the amount that you're working with VAT inclusive? So that's always 115. If that has not been included, or you're trying to exclude the VAT, then that would be 100%.
I think I might have phrased my question weirdly. I
Okay.
realized.
Okay.
I think my proper question is, why is it that the VAT inclusive amount, from what I've observed, if there's for example, a credit, like it's a creditor, we are paying a creditor, why does that VAT inclusive amount go under the trade payables, but we put the 100% in the bank? Why not 115, the VAT inclusive in the bank and the trade payables?
Okay.
Oh,
So,
okay.
okay, can I take this question?
Yes, yes, yes.
Okay,
No.
so the reason why you put the full amount in the trade payables or the trade receivables column is because that is the total amount that either you owe your creditor or or your trade debtor owes you. So they owe you the full amount. They don't owe you the excluding that amount. They have to pay you the full amount and you have to pay over to SARS. It's not like you buy a loaf of bread, like I'm going to use Nazmira's example. You buy a loaf of bread, you pay the vendor the full price, not 10 rand to the vendor and then, the 5 rand or the 15% VAT to SARS. You pay it directly to the vendor, and that's why the vendor needs to record the full amount. And then the amount, and that goes onto your balance sheet. But then on your income statement, that is only the amount that you as the company earn, for example, because you have to pay over the balance to SARS, so it's not yours. So essentially, you have to split it out. In your income statement, you split it out, but on your balance sheet, that's where you have both the combined amount, if that makes sense.
Yes, thank you so much. That is exactly what I needed to clarify.
Perfect. Okay. You had 2 questions. Was your other question answered?
Yes, it was. It was you. I think it was you who answered it.
Okay, cool. Then let me take the next. Oh, wait. Tandazile, do you
Yeah,
have access now?
I think
Can
she's
we stop
sorted.
questions?
Yes, I'm back. Thank you. I'm sorted.
All right, cool. So we're gonna stop questions now and we'll continue with the question. Thanks.
All right. Please confirm if you can see my screen. Can you see my screen, colleagues? Can you confirm?
Yes, you can.
All right, thanks. So the next part of the question requires us to then post the entries that would have been recorded in the different ledger accounts or different journals, and we are then required to post them in the general ledger in terms of the VAT input account, the VAT output account, as well as the control account. So I'll be taking you through the VAT input account. So when you get to this part of the question, I won't be going through all the calculations that my colleagues took you through, but I will just be taking you through why we are debiting or crediting the respective accounts. So what is then important is to then understand what is the VAT input account. The VAT input arises as a result of the business having to claim VAT input when they make purchases, right? So the account is an asset account, which will then increase on the debit side or credit and will decrease on the credit side. This is an asset account because when you make purchases from your different suppliers, you are able to claim back the VAT portion. So there is a receivable that you can claim from SARS in respect of those transactions that you would have made. What is then important to start off with would be to include the balance, which was provided in the required as part of the trial balance. In the trial balance, we were provided with the balance for the input VAT account, which was sitting at 2715. So you'd open your account, your T account, by including the balance brought forward with that amount of 2715. The next part then would be to scan through the questions, the required in terms of what aspects have an impact on the VAT input, taking into account the transactions that you would have looked at and put in the respective transactions. We'll start off with the Yes.
Sorry to interrupt you. There's just been two comments in the chat for you to please zoom in a little bit.
Zoom in. Okay, sorry about that.
Oh, thank you.
Okay. Okay, I hope it's clearer.
Seems fine on my side, so we'll hope for the best. Thank you so much.
All right, no, that's fine. So as indicated, this is an asset account. Your assets increase on the debit side and the decrease on the credit side. So you would take your balance brought forward, and then you take into account the VAT that is coming through from the different journals that you would have completed. The first part would have been, you look at your cash receipts journal to see if there are any transactions that require you to adjust or process the, any VAT input transactions. So under the cash receipts, we noted that there was a transaction that took place on the 7th relating to discounts that were provided to date. And so when we give discounts to debtors, we then it impacts the VAT input account. We debited by the 24 Rand is included in this column of the cash receipts journal. Let me just find it. Sorry, I'm using my cursor. So you'd include your trade receivables control account by the 24 Rand. It's coming from the cash receipts journal. And you include the 24. The next amount, you then look at the next transactions that you would have processed. The next one being the transaction that took place on the 12th. So as part of the required, we noted that we received an account from Stationers Ltd for the printing of documents. So when you print documents, it's an expense to the company, and you would then use the general journal to record this transaction. So this was calculated as part of Part G, and you would then claim back that money because it's an expense that you've incurred, and you claim it back as part of the input VAT that you would have paid for that one, which relates to the trade payables account. We then had transactions on the 23rd and 29th, where we made payments to our different suppliers. We made a payment to C Cheetah on the 23rd for 1,150, and also made a payment to BBAM of 8050. This would have been then sitting in our cash payments journal. And you already have a column that highlights the VAT input amount that should be included in the VAT. It highlights the amount that should be included in the VAT input account. So the amount there is 1.2, and it relates to the payments that you made for the purchases that you made for the business. So that's coming from the cash payments journal, and it's 1,200. We're claiming it back because we've made a payment and we are allowed to claim back money from SARS. It's a receivable for us. The next transaction then relates to purchases again that we made on credit. We made purchases on credit on the 28th of March, and we received a credit invoice from T Tiger for goods purchased worth 14,720. So that amount is then 1,920, which you would have calculated as part of your required in the other parts of the question. You then include the trade payables control account again for 1,920. And this is coming from the purchases journal for the credit purchases that you've made. So then you would have been done with all the transactions that relate to the debit side. And the last transaction that we look at is in relation to the debit note that was issued on the 30th of March. So on the 30th of March, we returned goods to T Tiger for the value of 805, and we then calculate what amount relates to what portion is what is the VAT portion in relation to that amount. So the account is then credited because we've returned goods, and because we've returned goods, it means that we no longer can claim VAT for those goods that we've returned, right? So then we credit the trade payables account for the purchases that we've returned that are coming from the purchases returns journal for the 105. And then the last part would then be for you to calculate what amount must be taken to the VAT control account as you close off this account. I'll then allow my colleague Nombeko to take us through the next two parts, which you'll then see how the VAT control account is closed off. Thank you.
Thank you, Tandazile. I will just share my screen and take you colleagues through the VAT output account as well as the VAT control account. Okay, please indicate if you can see the presentation.
I can see it.
Can see it.
Okay, thank you. So what I've done here, I've sort of taken a snapshot of the VAT inputs account that Tandazile just presented, just for the benefit of us doing VAT control account. But my main focus would be on the VAT account, on the VAT outputs T account. So as Tandazile would have indicated, when you're doing your VAT inputs and VAT inputs and VAT outputs T accounts, these two accounts would be affected by what you would have posted on all your subsidiary journals. So on your cash receipts journals, your cash payments journals, your sales journals, purchases journals, the sales return and the purchases return journals. So anything that would have affected the VAT from these subsidiary journals, you then post onto the T account for either VAT inputs or VAT outputs. So since she's covered the portion of VAT inputs, I will just take you through the VAT output account. So VAT output, technically what it is what you would ideally be owing to SARS based on the sales that you would have made in your business, whereas the input is what you're claiming. You would be claiming back from SARS on your purchases you would have made. So the first step would be then to bring down the balance which would have been given to you in the trial balance. I've just included the snapshot of the trial balance in this tab. So as you can see, the VAT output here, it's given to us as at 2925. So that's the first part. I said this is a liability account, so this is where you would put in the 2925. That is the balance that has been brought down, which was provided in the trial balance. Then the next step would be for you to go through all these subsidiary ledgers that I had mentioned. So we'll start with the first subsidiary journal that we have, which was we've gone through the cash receipts journal. So on the cash receipts journals, this is where you have received physical cash, either for the sales that you have made or for your debtors that have paid you. And the VAT output then would be money that you would have collected, but you need to pay it over to SARS because it doesn't belong to you. So you would have collected it, but you are paying it over to SARS based on the sales that you would have made. So on this part, because it's a liability and it's money that you've collected, you'll record this transaction on the credit side. So the next transaction that we will do is to record this bank amount, and you will see the total here. I don't know if you can see my cursor, but the total on the VAT output column is the 2979. So that's the amount that you are owing to SARS and you would have collected based on the credit sales as well as your debtors paying you. Okay, then we go to the cash payments journal. So if you take a look at this cash receipts journal, there isn't any other column that is affecting our VAT output because we would have accounted for it in total in this column. So if you go to the cash payments journal, you will see we had a VAT output adjustment of 15 So this one, I think it arises from transaction number 5, which was it dealt with the discount that was received when we were paying the debtor. Maybe if I can just go through to the question. It relates to this required part of the question where we paid an account to Tiger, but after deducting a 115 discount. So there is a VAT output element to it, and we have recorded it in the cash payments journal. So the 15 is coming from here. So that's the next transaction that you would record in your VAT outputs to account for the VAT output effect of the discount that was received. So your trade payables. This would be the 15 rands, which is the net effect of the VAT on the discount that was received. Then we'll look through the next journal, subsidiary journal, which is our sales journal. And then on this, remember for transaction number 13, there were credit sales that were made to Lion and Wolf. Then the VAT output on that increases then our liability to SARS. So we'll also credit this. Your trade receivable. Sorry. Because it's your debtors that would be owing you. And you just take the total of the amount, which is 450. So strategies, where we can look, it's coming from our part C of the question. There's the 450 here, where we are accounting for the VAT output on the credit sale. Okay, then we go to the next journal. On the purchases journal, there is no effect on the output, since for purchases we would be claiming VAT, so that would be recorded as an input VAT and not output. Then the next transaction that would have affected our VAT output is where the debtor had returned some of the goods. So remember when we had when we made a sale, we would have claimed we would have needed to pay over a certain amount of that output to SARS. But since there was an error and we issued a credit note, we need to reduce the output amount that we are paying over to SARS. So in this case, based on the return that was made, on the sales return that was made, we would need to reduce then our VAT outputs account. So then we will debit this. It's a trade. We're reducing the debtor's balance, so your trade receivables would be debited this side, and the amount there was 9 rand. I think I'll show you also still on the cash sales returns journal where the 9 rand is coming from. So it's on the transaction number 21. Where we returned. There was a sales return that we issued. Then the next step for you would then to close off on this account, because when we look through all the journals that we would have had, I think we have taken all the VAT output effects on it. On the purchases return, there is no VAT output impact on it. So basically, so you're just summarizing all the VAT outputs that would have been affected based on your subsidiary journals, and you're summarizing it into the VAT output account. Then the next step is just to close off on this. So you just cast total of this, and then you're closing it off to your VAT control account. Next, VAT control. Which will be the difference between this and the credit side minus the debit side. Then what you're closing off to the VAT control account would be the 696360. Okay. Then the next step then would be to take the effect of this over to the VAT control account. So with the VAT control account, what comes from your, you'll take what you've closed off from your VAT outputs. I'll just highlight it. We're taking over this, the balance coming from VAT output. On the VAT control account, ideally what you're doing is determining what you would need to either claim from SARS as input or pay over to SARS in totality. So the summary of what your VAT output would have been versus what your VAT input is. So if the VAT output is more than your VAT input, you need to pay over to SARS. And if the VAT output input is less than your output, then you are claiming money from SARS. So on the credit side, you put your VAT output amount, which is what we've closed off with here. And then on the debit side would be your VAT inputs, which my colleague Tandazile had covered on top, which was your, I'll just go to it, the 5844. 5844. And then as you can see, our VAT output is more than what our VAT input is. So the balance here that you would need to pay over to SARS is the difference between the two. Will be your outputs less your VAT inputs. And this is what you would need to pay over to SARS. Okay. So this is your balance that you pay over to SARS at the end of your VAT period. I think I'm done with the section that I'm supposed to do. Thank you, colleague. Thank you for your patience.
Thank you. Okay, so we've come to the end of our, well, the end of the solution to the question, and there isn't a lot of time. However, I'm going to allow like 3 questions. And then the rest of you can put your questions in the chat, and colleagues will try to respond as efficiently and as quick as possible. But yeah, unfortunately, we won't be able to take all the questions verbally, so just the next 3 questions. Okay. The first question I'm going to take is F. Choku. I'm so sorry if I mispronouncing your name. Please forgive me. F. Choku, I have unmuted you.
Good evening. Hello, can you hear me?
Yes, we can.
Okay, I don't know if you wanted questions on VAT control. I wanted to ask on general journal. I don't know if I can continue.
Yes, you can.
Okay, with general journal, I've been struggling with it. I don't know for how long. So I thought today I'm gonna like get an idea what is happening. So I didn't understand it well when it was presented. If it's possible, if you can, anyone can assist me, if you can also do it on Excel, if that's possible, so that we can see what is being said. What is being explained.
Okay. Okay, let me try and do this. Okay. I would need to, let me go up and read the question again. Okay, so received an account from Stationers Limited for the printing of documents for 690 rand. Okay, so you received an account. Okay. The account from Stationers was related to printing and stationery, right? So that, and it's an account. So that means you've not paid for it cash. You are owing Stationers Limited. Okay, so when you owe Stationers Limited is a creditor. Creditors increase on the credit side. Okay, so you owe Stationers Limited more money, and the amount is 690 Rand. So you would credit Stationers Limited of the full amount of 690 Rand. Then what are you buying from Stationers Limited? You buying from them printing services. Okay, so because it's printing services, it's an expense. So expenses increase on the debit side. Okay, so we would debit printing, which is an expense. And then to get to the amount, I'm going to just do this here a bit. Sorry. Printing. We're going to credit VAT in credit payables. Okay. All right. So we set 690. So as Ms. Mira indicated, how do you get to the amount for printing? So printing is an income statement item, which means it needs to be excluding VAT. So the amount that of 690 is including VAT. It is what you owe Stationers Limited. So you owe them the full amount, including VAT. Okay. So you have this year, the 690 is 115%. So you need to try to get the 100%. You do that by going, the amount you have, 690 divided by 115, because that's what you have, multiplied by what you want. So that's multiplied by 100. And then the same for VAT. So this year it's what you got here, 690 divided by what you have, multiplied by what you want. And that's the 90, okay? So to check yourself, 600 plus 90 gives you the 690 Rand. Okay. And okay, now you need to know whether it's VAT input or VAT output, correct? To determine this, because you are paying, you owe somebody, you can claim back the VAT. So when you can claim back the VAT, it is VAT input because you're getting it in. Does that make sense?
Yes, it does.
Okay, cool.
And
yeah.
just one, so I think your answer was quite perfect. And I think the one additional thing to add, I think with the general journal, it's also items that are not in the normal course of business. So with stationery or printing, we wouldn't add it to the cash to the purchases journal, because in the purchases journal you also are acquiring on credit, but because you're acquiring goods, then you record it in the purchases journal. But because printing is not part of what you traditionally sell or buy in running the business, or part of your cost of sales, if I can call it that, that's why it goes into the general journal. So most general journal items are items that don't fall into, I think, the first journals that were done. Hence, it would then also fall into the general journal.
Okay, got that.
All right. Is there anything else you would like to know?
Yeah, I think on general journal, I just wanted to see when you record it there. I thought you're still continuing.
Okay, so I have not prepared this entire presentation. And it's going to take me some time to obviously ask the person that did do this to present it to you, but I will ask them to put it in the chat if that is okay, so that we can take the next question, because it will take time to, present the full solution, and we do not have a lot of time. We have already run out of time. All right,
Okay,
thank
it's
you.
fine. Okay, I'm not done. I was saying
Okay.
it's fine. I've done a screenshot. I'll check what was done. Thank you for your explanation. So the other thing related to that, when you were calculating settlement discount granted and settlement discount received, when VAT was calculated there, so I was just struggling to get that. I know the calculation, how do you choose the formula, but I was struggling to actually calculate the settlement discount granted and differentiating it from settlement discount received.
Okay, I think you're going to need to please listen to the recording again, because again, it's going to take a lot of time to re-explain the entire thing. And if you still don't understand after you've listened to the recording, then please go to your e-tutor site and, ask your e-tutor to explain to you further and explain to them what you don't understand. So you need to show them exactly what part you don't understand.
Okay, it was that part of settlement discount, but it's fine. I'll just read it through.
So wait, I'm guessing I'm not answering you or helping you well, but the thing is, I'm not sure which transaction it relates to. So you need to give me more detail in terms of that, so that I can actually assist you. But I cannot explain to you the full concept of settlement discount receipt versus settlement discount granted. That's what I'm trying to say. You need to tell me what part of settlement discount you don't understand.
Is the transaction that we did. It was
okay, so
actually
which transaction is
number
that?
5. Transaction number 5, when we're doing cash receipt journal and cash payment journal.
Okay. Okay, paid. Okay. Pay the account of T Tiger by direct payment after deducting 115 Rand discount. Okay. So T Tiger, we owed them 2310. Okay. All right. So we owe them 2,310 Rand. Let me go to my solution. Okay, yeah. So we owed them 2310. What left our bank account was 2310 minus the 115 Rand, which the question told us 115 Rand was granted as a discount after deducting 115 Rand discount. Okay, so 2310 minus 115 Rand gives you the 2195. Okay, so now you want to know the VAT element. Is that correct?
Yes.
Okay, so there's 115 Rand that you have you claimed from SARS already, because remember, cash payments means you incurred an expense, which means that you've claimed from SARS. So you claimed from SARS for related to 2310. However, you didn't pay 2,310 Rand, you only ended up paying 2,195 Rand, which means you paid less 115 Rand. So you paid less 115 Rand, but you claimed the VAT for the full 2310, meaning for this 115 Rand, you claimed the VAT back. So now you need to pay SARS what you claimed, because you didn't actually pay it out. Do you understand what I'm saying?
Yes.
Okay, so now how do you calculate that? So the discount was 115 Rand. The 115 Rand includes the VAT portion. So what you want is you want to calculate what the VAT is, right? So it's 115 Rand divided by 115 because this amount is including VAT and the VAT element is 15%. So multiplied by 15 and that's how you get the 15 Rand. And then how do you get the settlement discount amount itself? You had 115 Rand VAT, 115 Rand total discount divided by 115 because it includes the VAT element multiplied by 100 because that is what you want to know. How much discount did you receive? You received 100 Rand discount. Make sense?
Yeah, I understand.
All right. Thank you.
Thank you.
Pleasure. Next question is Neil. I'm unmuting you. Neil. Going once, going twice, going thrice. Okay, Neil is gone. I'm gonna give the opportunity to Boitamelo. Boitamelo, your mic is enabled. You can ask your question. Boitamelo, unmute yourself and ask your question. Going once, going twice, going 3 times. Okay, I'm going to the next person. Why Gola? I'm allowing you to ask your question. Please unmute yourself and ask your question.
Okay, I managed to unmute. My question is on the general journal. I understand that you said it's gonna take quite time, but also looking at the chat, we are all confused because it really wasn't presented well. If you can just explain the transaction that took place on the 31st of March. Please, just that, just only that, the 31st of March, because it wasn't presented. The lecturer or the tutor did not share the screen, so we literally did not get that part.
Okay, so there's no transaction on the 31st of March, right? So, but what happens at the 31st of March is essentially you closing out your VAT input and your VAT output accounts. Okay, let me just wait, let me start. Let me try and share this. Yeah, okay. Can you see my screen?
Yes.
Okay, so if you read the description here, it says transfer of VAT input to the VAT control account. Okay, so basically, it's the reason why I'm saying it's difficult to explain in detail now is because it relates to all of these transactions that you now closing out the account. So you basically need to go into each VAT input account and VAT output account and close it off. So you see, if you need to first understand, if you understood the general ledger, that's when you transferring it over.
Yeah.
Can you
So
see here, this VAT control account here, this here
Yes.
this is what goes into the general journal entries. So
you just take the totals of the VAT output and the VAT input.
Correct.
yeah,
Correct.
but I think the tricky thing is you need to actually go to the second questions to do the VAT input ledger, the VAT output ledger, close out the ledger account, and then get that VAT control. Then you go back, or you do the calculation 2 times, so which is inefficient in an exam setting. So ideally in exam setting, you do the journal, leave the amounts blank. You then jump to the ledger. If it's required, then you complete the ledger account for the VAT input. Then you input the amounts backwards. So I think that's the only confusing thing where you have to calculate it because it is the closing. But the best thing to do is to do the ledger account first, then move back to the general journal.
Yes.
Yeah.
Yeah, so just to add to that, so basically, because this type of question, you need to tackle it like you're solving a puzzle, right? The parts where you can't actually solve at that point, you move to the next one and then sort of like then try work backwards. You saw how we started the question to identify all transactions that relate to the CRJ, CPJ. Then we move to the next one to see which one relates to the sales journal and the purchases journal. Then we're gonna move to the ones that obviously we can tackle, and the one that we can't, then we sort of like try to work backwards. That is.
Yeah. So that's why even in the solution, it tells you the last two journal entries can only be done after your VAT input account and the VAT output account in the general ledger has been completed.
Okay.
Yeah. So basically, that's why I couldn't present this. It's because this entire thing relates to that, if that makes sense. Right?
Okay.
Okay. Last question I'm going to allow is T. Mapudi. You may unmute yourself and ask your question.
No, thanks. Yes, I wasn't aware that my hand was up. But no, guys, thank you very much. I managed to understand the VAT input and VAT output, as well as the VAT control account and the different journal entries thereof. Yeah, no, that's about it from my side. Thanks.
Okay, perfect. All right, then. Thank you, everyone. You can still continue to ask your questions in the chat. I'm going to ask the lecturer not to end this meeting right this moment, because once we end the meeting, the chat disappears. So, colleagues, if the question related to your section, kindly would you respond in the chat, and then so the students can get answers, because it's already 8:30 and we cannot take more questions right now. If that is fine. Okay. All right then. Thank you, everybody. Oh, sorry.
I'm just saying I will keep it open for until tonight, the chat after the class, after the meeting. So meaning that you guys will be able to respond until midnight.
Perfect. Thank you so much. Thank you, Clara. Yeah, and thank you everybody for your questions and listening to us. I really hope the class was helpful. And if you do have any questions, please direct those. If we are not able to answer you in the chat, please direct your questions to your e-tutor. You have an e-tutor site, please make use of it. We are here to help you guys. Thank you.
Bye-bye.
Bye.
Bye, everyone.
Thanks, bye.
Bye.